What's up everybody? In today's video, we're going to be going over my watch list. These are all companies that I have thoroughly investigated and determined to be great companies that I'd eventually like to own. The only problem is that they are too pricey for my liking at the moment. So what I do is I place them on a watch list and patiently wait for a better opportunity to buy them at a more reasonable price. Because there are 8 of them and the full video is going to be longer than most of you would like, I broke them up into shorter videos on each stock. You'll be able to find all the individual videos by following the link to the playlist right up here. You can also click on the thumbnails at the end of each video and it will take you to the next stock on my watch list. So without further ado, let's get started. The first company on my watch list is Ulta Beauty, ticker ULTA. Ulta is the largest specialty beauty retailer in the US with nearly 40% market share. This stock has been my watch list for quite a while, long before we got word that Buffett bought it. Most of the revenues come from cosmetics, followed by hair care, skin care, and other products and services. The beauty industry is extremely competitive and it's very difficult to establish a strong competitive advantage, but with the growth and profitability that Ulta has delivered over the past decade, it's obvious they have established some sort of advantage, just not what Buffett would consider a wide moat. I don't believe that Berkshire's purchase of Ulta came from Warren Buffett himself. Sure, they have a strong brand due to a wide variety of the best products and the experience that they offer when you buy from them. They also have a very strong rewards program with 40 million plus members, which allows them to effortlessly collect data on their existing customers' buying habits and to advertise directly to them and generate repeat purchases. But they're in a cutthroat industry, and recently they've been offering discounts and promotions to drive sales, which is not uncommon in this industry. This is not the kind of industry or company that Buffett himself invests in. There's just too much competition. Having said that, Ulta's financials speak for themselves. Revenues have been increasing in the 10 to 15% range, although that growth has slowed considerably over the past 1 to 2 years. So much so that the company recently posted a 1.2% same-store sales decline and guided to a potential full-year drop in same-store sales, which is rare for Ulta. Free cash flow is strong with about a 9% free cash flow margin, but cash flows did tick down in 2024 due to a deceleration of revenue growth, rising expenses, and an increase in working capital requirements. Earnings have historically been strong, growing around 20% per year, but recent headwinds have considerably slowed the earnings growth, which is why the stock has been hammered over the past year, and we find ourselves with this opportunity to buy a strong company at a pretty attractive price. Their shareholder returns are okay, not spectacular. They buy back 2 to 3% of shares outstanding, but they don't pay a dividend. Profitability is decent on an absolute level, but great compared to the industry. And this is one of the best things you can see when investigating a company. Rising margins over the long term. And their return on invested capital right here has been expanding consistently over the past 20 years as well. It's gone from around 5% all the way up to 35 to 40% range. That's about as big an expansion as I've ever seen from a company. You don't get their earnings and cash flow growth or this expansion of profitability over the long term without a meaningful competitive advantage. The only caveat is that their advantage just isn't as strong as something like Apple or Visa because their industry is so crowded. This is the only stock on my watch list where the valuation is reasonable, with a forward PE of 16, 1.6 times sales, and an awesome 4.9% free cash flow yield. It's obvious that Ulta is trading at a discount right now, partially because of the recent weakness, but also because they're maturing as a company and will most likely not post the 15% sales growth that they have in the past. Morningstar values them at $390, while CFRA says $463. The only reason why I don't own the stock right now is the lack of a wide moat in a cutthroat industry. If I'm going to hold a stock like that, I need a larger margin of safety than I usually require. I estimate their fair value to be around $457, but with a 30% margin of safety, I'd only be willing to pay $320. Well, that'll do it. I'd love to hear your thoughts on Ulta in the comments. Are you a buyer or a seller? If there are any other companies you'd like me to take a look at, feel free to leave them in the comments as well, and I'll eventually get around to them. Also, please make sure you like this video and subscribe to my channel so you don't miss any videos when I release them. It's a quick and free way you can help me grow this channel if you find this content valuable. Lastly, to continue to the next great company on my watch list, click one of the thumbnails that you see on your screen right now. Until next time, you all take care. I'll see you in the next one.